No, I got it.
You do it, mate.
Okay. Hello, Dornbush download number 117. With me today is Michael Doherty. Hello, Michael.
Oh, hello, Dean.
And I'm on holidays at the end of the week, mate, so this is all yours.
Yes, yeah, no, that time of year, isn't it, I guess?
It is that time of year, yeah.
Look, and I guess as a general comment, look, gee, 16's been a bloody tricky old year, hasn't it? Politically, I don't think we've ever seen as much instability or as much toing and froing as we've seen this year.
Yes, and even today, Michael, you know, that 19% backpackers tax got through, but now Shorten and the Greens and what's his name, that it's surprising Hinch actually stayed awake for it. Now they're pushing it back to the upper house and want 10.5%. So yeah, it's a tough old environment there, like the market.
It's craziness, isn't it? And I see that ABCC bill, the construction bill, that sort of threw us into that double dissolution in the first place. They've ratified that dramatically as well. It's just been a mental year. Even this weekend, you know, we've got the Italians basically going to a referendum to change their constitution.
We spoke a little bit about that last week, so if anybody wants to listen, we had the Better Shares economist had a bit of chat about that. So,
I think ultimately, there's a bit of concern that the current president, Matteo Renzi, if he doesn't get this through, then he'll fall on his sword, which then potentially could open the door for this Eurosceptic five-star movement that, as the name suggests, doesn't like the euro. So the thought is that if Matteo doesn't get back in, these guys potentially could get in, and then Italy would, you know, maybe be the next on the line to look at leaving the eurozone. So.
Or whether they just do what the UK did and have their own currency and still be in the European Union.
Yeah, that's right. I mean, it must be a logistical nightmare to sort of go back and change currencies all over again. But I guess we'll wait and see how that sort of pans out. But ultimately, it just adds to that uncertainty, doesn't it? It's just been extraordinary.
And then Trump as well.
Got the Trumpinator through the door, and lo and behold, the world didn't end, and markets didn't sort of crash, and all
markets
that
liked it, didn't they?
They did. Absolutely. But you know, certainly all the polls and all the betting agencies and all the other bits you try and look at to get a bit of an idea were all wrong, and he blitzed it really in the end. So, but no, certainly markets have settled down a bit since Trump's come in, and look, if he talks the talk and comes up with, does maybe half the things that he suggests he's going to do, you know, look at reinvigorating the US economy through tax cuts and government spending, then good on him if he can get the big wheels turning.
And that should be good for us too, Michael, shouldn't it? Like, it'll increase their dollar, lower our dollar, so good for our exporters, good for our companies over there in making money in the States, like James Hardie, etc. You know, and when it converts back to Aussie dollars, it looks a lot better, doesn't it?
Yeah, absolutely right. Yeah, so I mean, that's certainly an area that we've been having a look at, isn't it? That companies that do generate, you know, US-based earnings, or a good portion of their earnings in the US. So look, if you want a couple of ideas in that regard, you know, CSL jump to mind, James Hardie, of course, ResMed, Brambles,
Breville,
Amcor, there's a few in there, So you know, that's potentially an area where we could see a little bit of growth. I think the Fed Reserve get together at the end of December, isn't it, to talk
14th.
Rates?
14th of December.
So no.
And you know, if rates go up there, it's going to be interesting whether that is a bit of a powerful move for our market, and that might be the catalyst to give us that Santa rally. You know, so maybe from a timing point of view, 14th of February, 14th, 15th of December. Could well be a good time to buy for a bit of a rally into the end of the year.
Yeah. Traditionally, that's sort of the time, isn't it? That mid-December period where typically there's, you know, less trading, less volatility. Markets sort of incrementally just sort of pop up a little bit.
Yeah, so don't go on holidays. Actually, go on holidays in January, probably more so than December.
Yeah, absolutely. So, but no, it's been a pretty tricky and wild old year. I think as far as shares are concerned, we're sort of sitting on the fence just for the time being in a lot of respects.
Yeah, I think so, Michael. Yeah.
That mid-December time again seems to be the area of interest. But yeah, we'll probably bob around a little bit, no doubt, between here and there. And this Italian election over the weekend will, referendum rather, will give us a bit more sort of headlight, I suppose, into what might come up over the next few months.
Yeah. I suppose from a stock point of view or a sector point of view, Michael, like the banks have had a pretty stellar sort of run the last few weeks, haven't they? So maybe it's time to think about your weightings there. I know a fair few people now are pushing above that 50% in banks, and probably what should have around 45. It's weighting in the ASX 200s.
Yeah, that's right. I mean, certainly, the broad premise now is that we've probably seen the bottom of interest rates. We're not going to see any great jump up in interest rates here in Australia, of course, but those very low interest rates have hurt banks, haven't they? The margins have been squeezed. It's
interestingly enough, though, there's a couple of economists that are saying that if that inflation rate doesn't get up, they should cut again. So it's still there.
Yeah, it's a good point, isn't it? Yeah, those inflation numbers coming out in January. And again in April, that'll give us a really good indication as to where the RBA might sit. But certainly, if the US dollar sneaks up, that'll put a bit of downward pressure on our currency, which is one less issue that the RBA has to worry about. But you're right, the Reserve Bank will be very keen to see the inflation numbers. But if there's some sort of positive movement there, we may have now seen the bottoming of that interest rate cycle.